occur. There's a lot of purchase of land that is occurring there by big time builders, empty parking lots, old residential developments, old apartment buildings, gas stations. Today's video, yet another edition of the weekly condo market update. First, we're going to go through some rents in terms of downtown areas, the cheapest and the most expensive areas to rent in downtown Toronto. Then I'm going to talk about the latest survey that revealed that 20% of all GTA real estate owners under the age of 35 own more than one real estate property. Let's get to it. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, back with another video for you guys here today. Before we get into today's video, as always, feel free to subscribe, comment, rate, and review. Your support in that regard is always greatly appreciated in terms of a subscription, a like, and a comment. Lastly, you can find my contact information in the description box with regards to my Gmail, my Instagram, and my office information. Feel free to get in touch with me with any questions you may have with regards to anything covered in this video, anything covered in previous videos, or generally speaking, any question with regards to the GTA/Toronto real estate market. So enough of that. Let's get to the point of today's video, which is yet another edition of the weekly condo market update. As I always do on a weekly basis, end of the week, Friday, Saturday, I released a video about the condo market in Toronto GTA at large. In today's video, first, we're going to go through some rents in downtown Toronto in terms of areas that have fallen the most in terms of percentage for rental price, and areas that have increased the most. So in other ways of looking at it, currently the cheapest and most expensive areas to rent in downtown Toronto. Anyways, and after that, and as always, you can find the timestamps in the description and probably in the comments as well. In the latter half of this video, I'm going to cover for the second segment the latest survey that revealed that a lot of people in the GTA own more than one real estate property. The key figure here was that 20% of real estate owners under 35 own a second property. And what the implications of this is on condominiums, condominium rentals, and condominium investing. So really on the purchase and sale market and in the real lease market, which are more than the freehold side of things with regards to condominiums, very much so linked. Not that freehold leases and freehold purchases sales are not linked whatsoever. Obviously, market trends in one sector will impact the other one. Point is that it is more so the case within condominiums because so many of condominiums are investment properties that are rented out. Anyways, let's get to the first part of this video, which is the quarterly change by average rent in downtown neighborhoods. So usually when we discuss downtown on this channel, I've taken into account C1 and C8. There are portions of C2 that are obviously downtown as well. And in this portion of the video, I'm going to talk about the annex, for instance, which is not in C1, right? Speaking of the annex, areas that increased the most were the annex, waterfront communities, Trinity Bellwoods, Dustin Grove, Kensington, Chinatown, Bay Street Corridor, and University. The highest percentage increase with all these areas was Trinity Bellwoods, seeing a 12.9% increase. But in terms of dollar figure, the most expensive of these areas is University at $2,400, more specifically $2,427 a month for average rent. Now, before we break down these numbers, let's also get into the cheapest areas or areas that fell the most in terms of average rent. One thing of note though, obviously, these are two different perspectives, the cheapest areas versus areas that fell the most. Sometimes you'll have areas that fell the most, but that area in terms of dollar figure will still be more expensive than areas that increased the most. However, for the purposes of this video and this topic, when you look at the numbers, these two categories kind of correlate very well. So in this instance, all the areas that fell the most are also the cheapest areas, and all the areas that increased the most are also the most expensive areas. You do not have a lot of overlap, if any whatsoever. Areas that had a quarter-over-quarter percentage decrease and are the cheapest are areas like Moss Park, Palmerston, Little Italy, Little Portugal, Davenport, and most surprisingly, Church Yonge Corridor. The biggest of these, so the biggest percentage decrease of these is represented by Little Italy, but the cheapest rent actually resides in Cabbagetown at $1,700 a month. Now, what do these numbers mean? Why are certain areas high? Why are certain areas low? Why do certain areas increase in rent? And why did certain areas fall in rent? Well, let me just break it down in these terms. If you notice, the center of the downtown core towards the west side, for the most part, had all areas that have increased in rent and are more expensive, with the exception of Little Portugal, which should tell you something about Little Portugal, something I've been telling you for the longest time in terms of the available inventory there in general. In contrast, the areas that have fallen percentage quarter over quarter and are the cheapest are towards the east side of the city. So once again, the eastern half of the Church Yonge corridor, Moss Park, Cabbagetown. Why is that the case? Well, rents are cheaper there because those areas are still looking for a lot of development, and a lot of development is going to occur. There's a lot of purchase of land that is occurring there by big time builders, empty parking lots, old residential developments, old apartment buildings, gas station. However, the enthusiasm and the influx of builders looking for lots to build upon has not been reflected in the numbers yet, because obviously a lot of these projects are going to be completed in 2.5 years to 3 years. What current inventory does currently reside there is in a very compact space. As a result, there's a lot of inventory, a lot of landlords that are looking to rent out within 3 to 4 buildings that are very, very, very immediate to one another. And this is the best inventory of the eastern portion of the city thus far, in my opinion. Thus, what you have is an oversupply and not enough demand in the time being, in the short run. But within 2.5 years, 3 years, when there's more development towards the eastern side of the city, so in other words, put condominium investors and even end users who are very much so financially savvy, and they do really care about appreciation more so than they might care about their end user experience. These people are somewhat of early adopters in the eastern side of the city in C8, and for the purchase and sell market, and both in the rental side of things as well. I foresee in the next 3 years, or 2.5 to 3 years, rents and property values appreciating substantially, especially considering what they can be currently bought at this current moment in time. And things are trending in this direction anyways. If you recall, in my Toronto real estate market updates, I explained how C8 actually increased in value overall in terms of average condo prices pretty substantially and pretty surprisingly well. Now, moving on to the latest survey released, which had a lot of key facts and interesting numbers that I want to share. One of which was the big headline that a lot of publications used, which is nearly 20% of homeowners under the age of 35 own a second residential property. Now, what I found somewhat interesting and a little disturbing is that 42% said that they used equity from the first residential property to make this second purchase. So to me, that shows that a lot of the investor base that is under 35 in terms of downtown Toronto condominiums. Now, this doesn't exclusively apply to condominiums, but let's be honest, if you are probably an investor that owns the first property and you're buying a second property and you're renting out the second property and you're under 35, once again, most likely you are buying a condominium property as this second property. Of course, this does not exclude residential freehold properties. They're baked into this number and this percentage, and this is not an exact science, but it's a fair inference to make here. This means that people are, once again, unfortunately somewhat over leveraged, and these people are landlords. And this has potential to create a dangerous house of cards that could collapse. Anyways, due to some technical difficulties, I'm actually going to end this video earlier. You won't see the technical difficulties because I'll be editing them out. You can find my contact information in the description box. Feel free to get in touch with any questions you have. Subscribe, comment, rate, and review, and thank you very much for watching.